Hey there, I'm Apple Crider from Investing Simple. In today's comparison, we're breaking down the two popular investing apps, M1 Finance versus Robinhood. These are currently two of the most popular investing apps and are primarily tailored at the newest generation of investors. In this comparison, we're breaking down the core features of each platform, what sets them apart from each other, and which one is going to be right for you. So one of the reasons that both of these platforms are so popular is that they are both 100% free. That means there are going to be no fees and no commissions for you as an investor on each of these platforms. So in terms of the core features, let's start off with M1 Finance. So in general, M1 Finance is going to be best for investors who want to create relatively stable long-term portfolio. So if you're a buy and hold investor that doesn't plan on changing your holdings very often, M1 Finance might be a good choice for you. And the platform is based on this idea of so-called pies. And essentially what a pie is you create a target portfolio allocation. So let's say you wanted to invest 20% in Google, 20% in Amazon, 20% in Facebook, and 40% in Walmart. Okay, say that was your target pie. What you do is you go on M1 Finance, you set up this pie, and you just start putting money into the pie. And then M1 Finance takes that, say you put in $100, takes that $100 and splits it across those four companies as your asset allocation determines. So you're not going in there and saying, I want to buy one share of Walmart, one share of Facebook. You're not doing that. Instead, you're putting money into the pie and M1 Finance is splitting it up for you. This is one of the features that really sets M1 Finance apart because no other investment platform operates like this. Now on both platforms, you're going to have access to traditional taxable accounts as well as margin accounts. On M1 Finance though, you're also going to have access to retirement accounts. So these are things like traditional IRAs and Roth IRAs, which are going to allow you to invest on a tax advantaged basis and potentially pay lower or no capital gains tax on your investments for retirement. But there are some specific rules about these accounts that you have to know, so stay tuned for future videos on those. In terms of the assets you can buy on M1 Finance, currently you're only able to invest in stocks or ETFs or exchange traded funds. You're not going to have access to things like crypto or options or short selling. It's really just tailored towards long-term stock market investor. Now, there is a minimum to get started on M1 Finance, and it's $100 for a traditional taxable account or $500 for a retirement account. Additionally, you'll need over $2,000 in your account if you want to invest on margin. When it comes to your investments themselves, M1 Finance has some really cool features that are going to set them apart from many of the other investing platforms out there. The first of which is fractional shares. As a beginner investor, it can be tough to invest in companies like Amazon or Google that are trading at over $1,000 per share. You'd have to come up with over $1,000 just to buy one share of this company. But on M1 Finance, they actually allow you to buy down to the 1/10,000th of a share. So instead of forking over $1,000 for Google, you can buy a 10,000th of a share for pennies on the dollar. This means that you can keep as much of your portfolio as possible invested and as little cash sitting on the sidelines as possible. In addition, M1 Finance offers a dividend reinvestment plan, which allows your dividends to be reinvested back in your portfolio instead of being received as cash. Now, this is great for longer term investors who want to take advantage of compound interest. But one thing to keep in mind is that M1 Finance's dividend reinvestment plan, or DRIP, is a portfolio level DRIP rather than a stock level DRIP. And what that means is that your dividends will be reinvested across your entire portfolio, not just the company that paid them out. Another feature that really sets M1 Finance apart is the expert pies that they offer. So M1 Finance offers dozens of expert portfolios that have been designed by both themselves and top level investment companies that you can invest in absolutely for free. So if you don't want to design your own pie, you can pick from a host of expertly designed pies that include things like target date funds, which automatically adjust over time to match your time horizon. You're also going to be able to take advantage of automatic rebalancing on M1 Finance, and this essentially forces you to follow Warren Buffett's time-tested advice of buying low and selling high. Because if you go to put more money into your portfolio, it's going to bring you back to your target allocations. So let's say they'll get a portfolio that was 50% Google, 50% Amazon, and Google fell so that it was now only 40% of your portfolio. If you invested more money into that portfolio, more of the money is going to go into Google to bring you back up to 50%. And that's going to force you to buy Google when the price has fallen, so you're buying on the cheap. The same thing goes if you were to sell. So if you were going to sell out of that portfolio that was now 60% Amazon, 40% Google, it would sell more of the Amazon stock to bring you back to 50-50, in essence forcing you to sell high. This is coupled with their tax minimization strategies, which are going to also look at the tax implications of buying or selling certain investments and make sure that you're making the smartest tax decisions possible automatically. So you don't have to think about this stuff. M1 Finance is optimizing for your taxes for you whenever you add or subtract money from your portfolio. Now, one thing to keep in mind with M1 Finance is that there's only one trading window per day, so you cannot actively trade on the platform. Every morning is when your transactions are going to happen. If you've added money or if you're trying to sell, that's all going to happen in the morning. And then after that initial window, you're not going to be able to buy or sell for the rest of the day. This means that it is not possible to day trade or effectively swing trade on the M1 Finance platform. M1 Finance is also going to provide a cash account for you to keep your idle cash when it is not invested. Now, if you're not on the M1 Plus plan, then you're not going to be able to get any interest from this account. But if you do upgrade to M1 Plus, then you're going to receive a relatively high interest rate on this uninvested cash. Now, when it comes to M1 Plus, this is a $125 per year annual subscription that you will need to subscribe to if you want to take advantage of these advanced features. Now, for most users of the platform, it's totally not necessary, but there are a few key benefits of M1 Plus that I'm just going to highlight right now. So the three biggest benefits of M1 Plus is that you're going to get a second trading window. So like I mentioned before, you're only getting one trading window per day on the normal M1 platform. But if you opt for M1 Plus, you'll have one in the morning and one in the afternoon. You're also going to get lower interest rates on your margin account. So they lower the interest rate by 1.5% if you do upgrade to M1 Plus, which can be a big plus for you if you are someone taking advantage of investing on margin. And lastly, they're going to give you an above average interest rate, like I mentioned, on your cash account, as well as a cashback debit card that you can use to get 1% back on all of your purchases. So like I said, M1 Plus is not going to be necessary for most investors on the platform, but it might make sense for you depending on how you intend to use it. Now, shifting gears to Robinhood. In general, Robinhood's going to be best for shorter term investors who plan to change their holdings relatively frequently. The easy to understand interface is one of the reasons why Robinhood has grown so quickly and makes it very simple for new investors and traders to get started on the platform. On Robinhood, you're going to have access to the same stocks and ETFs as you would on M1 Finance, but you're additionally going to have access to trading options as well as cryptocurrencies like Bitcoin. You're also going to be able to take advantage of fractional shares on Robinhood, which work in $1 increments. So essentially, when you're making a trade on Robinhood, you can either choose to say, I want to buy X dollars in this stock or X shares of this stock, which allows you to be even more precise with your investing. There's also a dividend reinvestment plan, but this is going to be stock level. So if Apple pays you a dividend, it's going to be reinvested back in Apple, not across your entire portfolio. You're also going to have access to a cash management account that allows you to earn interest on your uninvested cash. You don't have to upgrade to any paid subscription to get an interest rate on this though, so that is going to be an advantage over M1 Finance. That being said, there is a paid subscription for Robinhood that you can choose to opt for if you want to, called Robinhood Gold. This is going to run you $5 a month, and it's going to include 4 main benefits for investors. The first of which is you will have access to margin investing. So you can't invest on margin with Robinhood unless you do upgrade to a Robinhood Gold account. You're also going to need to have at least $2,000 in your account to invest on margin. Additionally, you're going to have access to larger instant deposits. So with a standard Robinhood account, if you put, say, $10,000 into your account, you're going to have immediate access to $1,000, and the additional $9,000 is going to take some time to settle in your account. Now with Robinhood Gold, you'll have instant access to anywhere from $5,000 to $50,000 of your deposit, depending on the size of your account and how long it's been around for. This can be a big plus for day traders and swing traders who might need to make immediate decisions on a trade and really want to put money in quickly and deploy that money as soon as possible. You're also going to have access to level 2 market data, which is going to give you additional information when it comes to the bid and the ask price of individual stocks. This is extremely useful for active traders, but for long-term investors, not so much. Lastly, you'll have access to professional Morningstar research, which is something usually reserved for employees at very large investment companies, but with Robinhood Gold, you'll have access to it as an individual trader. Now, most of the Robinhood Gold features are tailored at shorter term traders, but they might be helpful for you as a long-term investor as well. In addition, Robinhood has a pretty sweet sign-up bonus where they'll give you a free share of stock just for signing up for the platform. You'll need to use our link though, which can be found in the description or the pinned comment below. Now, overall, brand new investors are going to have a really easy time getting set up on either Robinhood or M1 Finance. But if you're a set it and forget it investor that just wants to set something up passively and not think too much about it, then M1 Finance might be a better option for you because you can design a pie, let it sit there, set up automatic deposits to go in every single month, and just forget that it even exists. But either way, both platforms are free, so it doesn't hurt to sign up for both. get your free stock from Robinhood, and then decide which one is best for you. Personally, I have an account with both of these platforms and have a little bit of money invested with each. I think they both serve their purpose and I get value from both of them. Now, if you want to learn more about these two apps, just search for M1 Finance versus Robinhood on Google and look for investingsimple.com. We'll see you over there.